Now we've got to touch on Tesla and a price target by a company that has billions of dollars under not only management, but specifically in Tesla stock. We're going to go through what their price target is for both 2025 and 2030. But first, what I'd like to do is look at an opinion piece by a Bloomberg journalist. And I have to say, it's pretty good. I think it really hits on some sentiment. And I love the title. Musk has turned Tesla's, quote, failing into winning. And really what he's starting off by saying is that there's so much fear, uncertainty, and doubt that's placed on Tesla that it's almost like the old Shakespearean line of, methinks thou protest too much. I've changed that slightly, but that's what we generally colloquially say. And that's really to say that it seems like so much of the hate for Tesla is misplaced. That there's so much criticism, while at the same time as there's so much criticism, you end up with a company that outperforms over and over and over again. It's really incredible. I mean, I have to say, from a personal point of view, I could not believe when somebody came up to me and said that they actually uninstalled Twitter solely because of Elon Musk, that they won't buy a Tesla solely because of Elon Musk. And I'm thinking to myself, like, how much CNN are you watching? Because the hate is totally misplaced. They can't actually give you a really good reason for hating on Tesla. One of the things people do who hate on Tesla is they talk about recalls. And I love this. This was a fantastic quote here. It was actually from a Forbes article. Sawyer Merritt here quoted this Forbes piece. It was fantastic. Since January 2022, Tesla has had, quote, 21, or quote unquote, recalls for about 4.1 million vehicles, with some vehicles counted multiple times. 99% of those vehicles were fixed using a software update that did not require customers to go into a dealership or replace parts. And remember, like when you get a recall for a car, it is an opportunity for the dealership to sell you more service, right? So in some regard, the recall game is actually profitable for companies. They get people to bring their cars into the dealership thinking they're getting something for free. But of course, when you go in, inconveniently taking time obviously out of your day to actually go there and do it and have somebody drive you back and drop you off or whatever, you actually often get sold some form of other upgrades or service because you may as well get that additional service done because you're already there. You've already gone through the inconvenience of going there. So the sunk cost fallacy sets in. People are more likely to spend money on their vehicles because they're already there. But going back to the rest of this tweet right here, from this Forbes piece. Meanwhile, Fiat, Chrysler, Kia, Hyundai, VW, BMW had no software fixes, and Ford, Nissan, GM, and Mercedes did have software fixes, but they were able to only fix 1% of the Ford recalls, 2% of the Nissan recalls, 32% of the GM recalls, and 17% of the Mercedes recalls were fixed via software updates. Whereas, again, with Tesla, 99% of Teslas were fixed using some form of software update. Here's that Forbes piece, by the way, if you want to look at it. Tesla recalls 4 million vehicles since January of 2022. You could read the rest of that Forbes article if you'd like. But really, there does seem to be this hysteria around hating Tesla. And what's remarkable is, despite all of this hate, somehow Tesla continues to get stronger. And this is what the Bloomberg writer here is saying. While everyone thought Musk's entanglement with Twitter would be damaging to Tesla, or the recall FUD, the business practices, lawsuits, whatever, what you end up getting are results that prove otherwise. Tesla, they say, is now turning $100 of revenue into an industry-leading $26 of profit for their for gross profit. Now, keep in mind that is expected to go down to about $20. So I don't want anybody to freak out when we see margin potentially go down to $20, at least in the next few quarters, after some of the price reductions that we've seen and until some of those commodity costs actually start flowing through as lower, barring any further increases. Keep in mind that Tesla, in their last earnings call, told us this. They told us they expect to potentially see gross profit go down to $20 And then, of course, the goal would be to see that rise back to $30, about that 30% margin. But even at $26, this is seen as the widest gross margin really in the industry. And if you look at their net profit margin, the way they wrote this and then showed a chart here was a little confusing. But this chart right here is actually a chart of their net profit margin. Tesla's net profit margin far exceeds any of its competitors. And what you really want to pay attention to is BYD is right here on the right. It's this orange line. Let's use the laser here. There we go. It's this orange line right here. You can see that their net, at least on this chart here for last year, is sitting somewhere under 5%, right around 3 to 4% is where BYD sits. Volkswagen knocking on the door of probably, half of that, maybe somewhere around 2%. Toyota is over a little bit higher at about 7%. And Tesla, on a net basis, is sitting up here at 16 to 17%. Net. That's really incredible. Now, what's also really incredible is you just had who was it? Mr. Toyoda, who was the CEO over at Toyota. He ended up saying, hey, about a month ago, he was interviewed, and the Wall Street Journal ran this story. He ended up saying, I'm part of the silent majority. Everybody wants a hybrid car. This is Toyota, often regularly deemed one of the most reliable vehicles in the industry, right? Vehicle manufacturers in the industry with some of the highest resale values. They're convinced on hybrids. Yet within a month of that, it turns out he's getting the boot. And they're replacing him with a CEO who realizes, no, we need to double down on electric vehicles, not just hybrids. But let's keep going with the Bloomberg piece here. So you've got 30 analysts have a buy recommendation on Tesla, a record for the company since their IPO in 2010. Number of upgrades on the company rose 32% last year, even though Tesla's share prices plummeted 65% amid a nasty bear market for tech-related stocks. Bloomberg's consensus rating, which quantifies analyst forecasts, reveals no other automaker was so emphatically upgraded. Perhaps the reason why analysts are so enamored is because Tesla continues to prove doubters wrong. And these were some interesting quotes here. Listen to this. Model 3 sedan sales increased from basically zero to about 500,000 units in 2022. They had less than 2,000 in 2017, ran that up 278 times to about 500,000 in 2022. I don't think it's necessarily really fair to use that 278 number because obviously, you could just say they increased sales infinitely from zero, right? But from a comparison point of view, it's very interesting that the Toyota Prius has seen its sales fall 66% during the same period. And while the next biggest rival for electric vehicles saw their sales at BYD rise just 17 times. Now, BYD is crushing it, okay? Don't get me wrong. BYD is crushing it. They do not have anywhere near the margin Tesla does. They have somewhere around 1/4 to 1/5 of the net margin. We just saw that on the prior chart. But anyway, this was pretty remarkable. And I think they make a really good argument here that, hey, look, despite all of the hate around Tesla, Tesla's killing it. But beyond that, some of the price targets from people with massive amounts of money, like Barron funds, which has billions of dollars of assets under management, are really incredible. Let's take a look at some of these price targets. So this is you could actually read this full article in Seeking Alpha. The Barron Fund's letter was posted here. And they talk a little bit about the history of them investing in Tesla, first making 1.6% of their asset under management purchase into Tesla back in 2016. And since then, obviously, Tesla has grown substantially. They did end up selling around 6.8 million shares between 2020 and 2022, about a fourth of their shares to reduce their allocation to Tesla because it ran so much. Their average sell was about $221 a share, slightly above where it sits now. And of course, this was over the last 2 years here. But they still hold 17.6 million shares of Tesla, which is valued at about $3.1 billion. Pretty remarkable. But look at their price target for the Barron Fund. And it's just to show. This is, when people are bullish in the industry, it's really interesting to see if they're actually putting their money where their mouth is. And here's an example where they are. We believe Tesla's share price would reach $500 per share in 2025. Now, I'm not trying to pat myself on the back here, but that happens to be my price target for 2025. Maybe they're watching my videos. If you are, I'd love to do an interview with you. And if you're not, that's okay. Because I don't want to read my own opinion. I want to read other people's opinions. But anyway, and their 2030 price target, which I don't really have a 2030 price target. I mean, I've mentioned some out there. There's somewhere out there. We've done some numbers on in the past, but it's not super salient in the back of my mind. But anyway, 1,500 is their 2030 price target. And they are still reiterating that price target today. That's based on our expectations for Tesla's long-term sales growth, high industry-leading profit margins achieved for its exceptional products. Not only are there approximately 80 million cars sold per year, but the quote car park worldwide that needs to be replaced is more than 2 billion vehicles. These are cars powered by pollution-emitting ICE engines, internal combustion engines. I mean, that's kind of like saying an ATM machine, right? Automated teller machine, right? ICE engine is kind of like internal combustion engine. So now you gotta be careful on that. But anyway, if you just say ICE, it sounds a little funny. So anyway, gas cars, gas guzzlers. There, simpler. Anyway, this is pretty remarkable. And a remarkable price target, and it makes sense. I mean, after all, the profit margins alone speak for themselves at Tesla. Where is it? They were on my in my Bloomberg piece. Stand by. The charts over here are ones that we talk about regularly at Tesla. And we could really use these and model some of the more, in my opinion, worst case scenarios with Tesla pricing by seeing, hey, what does Tesla look like even if we end up with only a 20% margin and potentially lower growth rates, right? And so if we do that, well, let's model it together and let's see what we get. So let's go to a 20% gross margin. Let's assume 20 vehicles, or here, by 2025, let's assume 4 million vehicles, and we'll go with 47,000 revenue per vehicle. We'll keep everything kind of stable here that we generally do. So short of re-explaining this whole sheet, again, if we go with just a 20% gross margin, which is pretty weak, we expect that to rise up to 30% again at the end of the decade, maybe within the next few years, who knows. At a 30% assumed growth rate, which is lower than, that's probably the lowest part of the range that Wall Street is generally expecting, you're still sitting at about $400 per share at a 30% growth rate, and then a 1.67x PEG, which is a very reasonable ratio, very, very reasonable for a company growing at 30% to be selling for 1.67 times PEG. We're closer to like 0.8, 0.9 right now. On what Tesla's selling for, but its long-term average is substantially even above 1.6. But anyway, so if we just change that to where the margin is approximately right now, and we go to say, I don't know, let's go with an expense of 74, that gives us profit of about 26. So if we go with about a 26% margin, that number changes to $533 pretty quickly. But you could see how every 1% makes a difference. You go $533, we just change margin 1%. 533 turns into 511. So you're looking about every 1% of margin at Tesla is worth about $22 per share. It's quite a bit because that margin is going to fluctuate. And I do think there's going to be some fear around what happens in the Q1, Q2 earnings for Tesla, specifically because margin will probably be its weakest during those quarters, and those will be quarters that we're also still evaluating. Hey, is inflation ever going to go away? Is the Fed ever going to relax? So these are these are things to pay attention to. From some comments here, we've got someone saying Mr. Toyota is a genius / sarcasm. Someone's laughing too. How much CNN are you watching? I mean, I hate to say it, but they seem to be one of the pure ones that seem to be bagging on them pretty heavily here. Have you guys seen the electric solar powered yachts? You know, I hate to say it, but I think a lot of any solar powered engine for now, probably just clickbait. Most of the solar power that we can actually support on any kind of vehicle right now just goes into preconditioning cabin temperatures for either cars or boats. And anything wildly, if it's powered solely by solar, it'd probably take 12 hours or more of sitting in the sun, potentially days of sitting in the sun to actually fill up your batteries. Is it possible? Yeah. I mean, to some regard, we could put you could put a solar panel on a Tesla and potentially charge the sucker up if it sits out in the sun for a couple weeks. I mean, eventually it'll charge it up. Solar power isn't quite there for compact form factors yet. Now, can you do it with solar farms? Absolutely. Big fan of solar farms. I think we should have a lot more solar farms out in the desert areas of California or Vegas. We've already got solar farms, but we should have even more. I think that's a phenomenal way to do it. And now you're also producing solar at scale. Throwing solar panels on smaller vehicles, though, I think is mostly just clickbait. And trying to make people, be able to say, oh, I'm green. That'd kind of be like, oh, my jet has a solar panel on it. It's like, it's like bullshit. Excuse me, but for what it's actually producing. So I'm not a fan or a believer in any kind of solar panels on vehicles, and I probably won't be for a very long period of time because the solar panel technology, its capture rate is still very, very weak. Its efficiency is, solar panel efficiency has got to be somewhere in the 20% range, so it's still really inefficient. But what's remarkable is, as much as we're seeing solar panels spread, imagine if we could just increase the efficiency of solar panels. They're already good in bulk factor, good enough to be on the roof of your house, for example, good enough to be in a solar farm. Not there yet for vehicles, but there's so much potential science that can go into making the capture technology for solar so much better. That in the long term there'll be some pretty neat advances, and I think in the long term, in the future, sure, solar panel on vehicles I think would be a possibility, but I don't think we're anywhere close to that. I think we're 20, 30 years away from seeing that. But it's interesting. It's still interesting. Anyway, a yacht was unveiled in Dubai. The hull of the yacht was all solar panels. That's interesting. Thank you for sharing that. What's up, Hustle Smart? You guys still don't buy it? Especially the hull of the ship. I'm like, you really need, the angle of incidence matters so much. And maybe you could argue you're getting some reflectivity off of the water to try to power this, but I wonder how much efficiency falls now if the hull of the ship, instead of actually pointing at the sun, is exposed to the solar radiation that brings the solar energy. I don't know. I'm not buying that one. and then when I hear Dubai too, I'm like, okay, like a world of like facade, man. Come on. And I'm like, sorry if you live in Dubai, but you probably know it or have been to Dubai. It's all facade. But anyway, you know what? It's very fitting actually that the facade of a solar paneled boat was unveiled in Dubai.